Hello, welcome to another Wenalyze webinar on our series Insurance is all about data. Today's topic is what's the past, the present and the future of data analytics and insurance. And I'm privileged to have one of the best speakers in the industry for this topic. Jay, how are you?
Thank you, Roger. That's quite an accolade. I'll try and live up to it, but yeah, thank you very much. It's great to meet you.
I'm sure we can justify why I believe that. Jay, thanks for coming to our London offices.
Pleasure.
I think to understand more or less why do you have a vision on past and present and future, can you tell us a little bit about your background that is related to data and insurance?
Yeah, of course. I mean, my background really is data and insurance, really. So I'm currently head of data products for Simply Business. So Simply Business, we're a micro insurer that sort of puts data at the heart of what we do to understand how we can do more for our customers and things like that. But over the last 20 years or so, can't believe it's been as long as 20 years, but it has. So I've been in sort of underwriting, pricing, marketing analytics. I've used kind of data across really like the commercial spectrum from like the start of finding your customer to underwriting it, to underwriting the customer across various use cases, across carriers or insurers and brokers. I've also done a bit of a stint in a data company itself, so I worked at LexisNexis for 3 years heading up their home division, and like I say, data's always been central to my objectives, be that as a junior analyst or now sort of heading up data products for Simply Business. It's always been very important to me.
So you basically have seen all the areas where data is related. In insurance, we could say that, right?
Yes, so if you think of data as sort of applying to like a wide spectrum of use cases, like I say, from understanding your customers' needs and wants, or when you're trying to sort of brand appeal to them, so almost like the end of the insurance life cycle, which is when a customer wants to claim. That's ultimately what they bought the product for.
Yeah.
There's all sorts of use cases and applications of data in between that to sort of understand your optimization rates for your website, for example. But the manifestation of data really became apparent in pricing and underwriting. It won't shock anybody to sort of say that's kind of where it started, right? So and then kind of sprouted almost leftwards in the customer life cycle and rightwards. It kind of, in my view, emanated from that central pot.
So data, so the insurance industry is basically based in data, right?
Yes.
All the decisions are made considering the information they have about their customers. Products are created based on that information. However, data analytics, I was looking at the definition before, because I wasn't sure if it was classified as a science or not, but it's defined as the process of analyzing data sets to identify trends and extract conclusions.
Yes.
Right?
Yes.
And data analytics hasn't been there forever. I think that nowadays almost every insurance company has a data analytics department, but they've created them probably 5 to 10 years ago, if I'm not wrong. So in your opinion, at what point did data analytics become so relevant in the insurance industry, and what's the reason behind it?
Yeah, it's a really interesting question that we could probably discuss for hours, to be honest.
Yeah.
So I think you're right. I'd say data analytics has become very relevant in the guise that we know today, obviously very recently.
Yeah.
But the concept of understanding your customers has been there for many, many years. I think it's the way we get out to that sort of the way we execute on that is very different now because of the explosion of big data and things like that. The ability to, technology's moved on at lightning speed over the last 10, 20 years, and the ability to do more has opened up new use cases, right? But, 20 years ago or however long ago it might be, like an underwriter, for example, had their own insights and their own views into their customers because they knew them. That was before the internet and that sort of thing. That they knew the customer they were underwriting because they used to go to them every year and they kind of knew their family background, etc. It may not have been massively scientific, certainly relative to today.
Yeah.
It wasn't very scientific in the same way sort of data science and neural networks, for God's sake. But you know, but it was still the concept of understanding your customer base and understanding the risk you're underwriting has been there for probably since you started, like centuries ago. But I know what you're getting at, like, in terms of the data analytics angle. You know, I think it's fair to say it sort of started 15, 20 years ago, around the time I started actually, and it emanated from this sort of central point where there was a need to understand risk better, and there was this kind of it became very apparent that there was new information out there that could help in that aspect, but maybe the ability to digest it and the ability to ingest it, the ability to actually process it wasn't necessarily there. That's why you I tend to think of the adoption of data as we know it in insurance as like having a bit of a bell curve. So and you know, if you go to a business school, they'd probably say that, but it's a very, very relevant analogy for what we're talking about, because you did like 20 years ago, you had the innovators, which were a very small group of companies in personal lines. I'd say there are a small group of companies that specialised in motor and home, and you know, the main use case, as I sort of said at the start, was this sort of central point of understanding your underwriting risk better. So even, you know, moving from postcode rating to address point, for example, where you've got more accuracy around like flood risk, for example, was one of the key use cases that these personal lines insurers started to introduce around sort of 2005, and then, you know, everybody thought, oh, that's a good idea. And you know, ultimately it began to spread because people saw the value of it. Like, it's all to do with your relative understanding of your customer to your competition. That is the key spur. That is the key need for the insurers specifically around what sparked this kind of almost arms race on data, right? So you had the innovators, and then I'd say then that sort of sprung a bit of an early majority, and there was a couple more kind of sort of prompts or pushes in the right direction, such as, I remember sort of 2009-10, there was a real kind of sort of bodily injury crisis in motor, for example. Like, it became like the industry was losing quite a bit of money in certain perils, and you know, then there was a really bad winter in 2010. I remember myself, I got sort of I just bought like a new car, and I was like snowed. I basically got stuck on a road like overnight. It was horrible, and it was like that winter of 2010. I had to basically abandon my car and then just sort of like go and get it in the morning. I remember that winter of 2010 was terrible. So again, there was some. Basically, I'm saying there was some insurance underwriting events that triggered the need to find a new way, or a better way, or a more advanced way. And like I say, it was like the amalgamation of a couple of, like I say, circumstances that meant that, okay, we've seen these two companies do it, we've seen, you know, it's begun to be talked about in the media, etc. And you know, the main constraint, I'd have said, to sort of prevent more uptake was technology. So you know, the IT departments in sort of the late noughties probably couldn't consume certainly the data that you can now, for example. And so there was this kind of, that was kind of the era of big transformations. So you know, I think quite a few companies did quite well about this. I think it's quite fair to say that, without mentioning names, but like, you know, like like big IT transformations in order to sort of ingest the data, the actual companies themselves to actually distribute the data companies themselves to actually deliver the insights. They basically, Roger, spawned an entire industry at this point, and still going on today.
And I think we always see the same structure. If we talk about the bell, where there's one crazy person saying, maybe we can use this algorithm to, you know, understand better the risk, and everyone's like, what the hell are you doing? And then
was that you back in Spain? Was it?
Well, I mean, we've always been tagged as crazy guys in one way or the other. But then when you come to the evidence and you see the results, then it makes sense. And once one insurance company or two insurance companies are doing it, the industry itself is not that big. So one says, yeah, we're doing this and it's working well, and then everyone starts to replicate those models. So I think it's kind of the natural evolution for any sort of innovation. Now, if we keep thinking about the past, do you see where were like the first applications or the first, let's say, technologies from paper and pen to something we can call data analytics? What was the first thing you saw?
So I think that it very much started in pricing, right? So understanding how your risk was, if you like, your understanding of risk was complemented by extra data fields. So that could be something as sort of mentioned earlier. I have so let's say a postcode has 10 addresses in it, okay?
Yeah.
But you had a rating on that postcode of rating 3, okay? What you don't know is what the distribution of addresses within that postcode is. So it could be, it's the classic, 2 of them could be rating 1, 2 of them could be rating 8, and you've got an average of 3, right?
Mm-hmm.
Now, obviously, that's unlikely to be the case for many or the majority, but that's where the real advantage of using like granular data became apparent. So you were able to, so insurers were able to offer more quotes by understanding the risk at address point rather than at postcode level, because, like I say, it allowed them to, effectively expand their appetite. So that was a really kind of key use case on the underwriting front. I think the other interesting point is like outside underwriting, like starting to ingest data around the person. So understanding, more about your own history, like your credit history.
Yeah.
So credit is really a key one that sort of started insurance around the same time. There was like a correlation between credit score and I think on motor is very, very strong. And the main category started to emerge around like perils, effectively. So this idea around sort of flood and subsidence and crime, for example, being done at a more granular level, and person data. So understanding the actual person that's driving on the motor side, or the person you're insuring, like the business owner you're insuring on the commercial side, for example.
So is there a correlation between credit score and motor claims?
I'd say yes.
I didn't know this, but
yeah,
it seems to be interesting.
So generally, it may not be credit score per se, but like generally, data that you have on one's kind of credit history. Be it, have you had sort of insolvencies before, you've been bankrupt? There was like a relationship between how claims behaviour and like your own kind of personal background in that sense in terms of credit. But that's sort of, since that was quite basic and quite rudimentary.
I guess it's about lifestyle, or in that sense, right?
Yes, so a lot of the kind of person-related data, if you like. So it's like public records. So do you have any CCJs or that sort of type of data? Was predictive of sort of personalised risk, and it still is. The question really is, how's the industry kind of moved on from that in the last 10, 15 years, because that's kind of quite table stakes. So any personal lines person watching this will kind of know that it's a known thing, I suppose. And just to sort of answer the question on the history part, like the interesting part for me was like the technology didn't exist to sort of consume that real time like you can now. So a lot of the data was done via batches and like via giant files. Yeah. So you'd get like an entire view of like, I don't know, a list of factors that was just sort of like dumped in sort of various kind of sort of chunked up into sort of various sort of pieces, rather than the API hadn't necessarily developed to the same point that it does now, where you can just call a real-time data set in less than half a second. Obviously, that goes back to that point on transformation and like the ability to actually make that data work for you. I'd say that's still probably a challenge now for some organisations.
Unfortunately, yeah.
But that's because the bar's just kept rising, right? So of course they can do what we were talking about then, like ingesting simple data, but to be able to sort of rate real time and do real time call is probably a different ask.
That's actually my next question was about. So where are we now, and what do you think insurers are more focused on in terms of applications or solutions? Like, what's the top priority if they have any?
Sure. So I think that sort of depends on who you are, and what I mean by that is data has different applications and uses across the industry, depending on what you want to do with it, and what you want to do with it depends on who you are, because your commercial objectives and your customer objectives are different. So I think a generalized answer, if you like, Roger, is simply that the bar keeps getting higher. So where I was sort of talking about using a proxy for using credit history as like a predictor of motor risk. So that's public records, right? So
everyone knows already.
Well, it's a publicly available data set, as in, like, it's a question of how you ingest it and being able to sort of consume it. But the kind of build on that is that, some organisations are using private credit data now, where the customer has it's really important to state this, like, where the customer has consented for it to be used, right? That is a material move on from just using the basic stuff. So in a way, going back to that kind of diagram of which I'm just imagining and just sort of drawing in the sky.
We'll put a picture.
So you've got, like, personal lines especially is obviously very mature in terms of using data and data enrichment, right? So the question really is, how do you move that on for, like, what's the question that the sort of data innovators and companies are looking at is, what is the next frontier? What is the next piece of information that is A, relevant, and B, will help me differentiate my understanding of my customer over and above what my competition do already. And so private credit data on the personal line side is a really good example of that. Now, one thing that I've thrown in the mix here that I thought I'd be interested in your views on, actually, is the advent of IoT data and, like, the take-up of rings and the take-up of, like, smart homes, etc. And there's so much data coming out of some of the objects that are insurable, which, I don't think as an industry we've managed to harness to the degree that we might have. And so when you say, like, where's the industry and what next, there's been this kind of attempt, I'd say, to sort of use some of that data, but it's never really quite taken off. Like the concept of, obviously on motor and telematics, that's sort of very mature and an absolute sort of well-known use case. But I wonder what your thoughts were on, like, IoT data and what you've seen.
So I, to be honest, I personally don't use any IoT things. Like, I don't have a smartwatch. I know they're very interesting, but sometimes I think I don't want to know too much about me. Like, I'm okay with this level of knowledge that I have about my health. That's fine. But I've seen some attempts. I've seen some cases in startups that develop IoT devices. If you look at telematics, it's very crowded space.
Yes.
And we could see how many telematics startups were created at the same time. Some of them survived, some of them didn't. And I think probably now in the market there are 3 or 4 references. I see that it's quite a sensitive space when we talk about health data.
Totally.
We have data protection laws on one place. On the other side, I think we are all more aware on the value of our personal data nowadays, and we sometimes are skeptical about the idea that a corporation can use our data for our own good.
Correct.
Right? I think we usually think that a corporation will always use it to sell more to me,
Yes.
or to increase the price, or to be bad towards us. But that's not real in 100% of the cases. I think that insurance companies have the ability to say, okay, look, you're a healthy person, so here's a discount on your life insurance, right?
Exactly that.
So data can be used for good, but I think data outside in the outside world has a bad reputation, especially after the Cambridge Analytica scandal and other scandals.
That's very fair. Yeah.
So I think it's a tough space in that sense.
Yeah, I mean, I think life insurers are using health data now to sort of help sort of underwrite in that sense. And, you know, that's a real kind of leap forward in terms of moving from estimating the risk to actually knowing with almost like much more certainty around, you know, like this guy is definitely, or this person is definitely, you know, exercising at least once or whatever it might be, you know, rather than everybody looking like somebody
the famous 10,000 steps per day.
Yes, exactly that sort of thing. I'm just wondering, like, outside like motor telematics, like you know, I think there are pockets of the industry that are using some of this kind of sort of, I guess, real data on the risk, as it were, rather than estimate it, but it's not taken off in exactly the way you might expect.
There's one very interesting example here. So there's one French startup called Luco. Do you know them?
I don't.
So Luco basically it started as an insurtech. We met when we were born together at the same time and did our first accelerator together. They developed an IoT device for homes. You basically stuck it to your, I think, electrical panel, and it understands if the electricity consumption goes up very strongly. So it's about trying to prevent fires, and it was about trying to prevent leaks at homes as well. Because they were tracking also the water meters and all that. So the idea was very smart. The device was just very, very small. You just stick it and that's it. The problem they had in the industry is that no insurance company was doing project with them, right? No insurance company was buying the device. They thought it was too much of a hassle. Their answer was very smart. They said, okay, if no insurance company is buying our device, we're going to become our own insurance company. So they managed to do it, actually.
That's pretty impressive.
Which is very impressive, and
it's very impressive.
I've always admired. They've raised the money, they built the insurance company. You can expect now that their data analytics models, the pricing models, are very accurate and strong based on that. And they're selling home insurance, and they're expanding in Europe. They're in Spain, I think they're in Germany as well, and they're in other markets. So sometimes you see those cases where, as you were mentioning, well, IoT is there, the data related to IoT is very interesting, but we don't see a strong penetration in the market. Well, sometimes the market is just being too slow to do it, and that's why a lot of insurtechs are born as one solution, and they say, look, you know what, I'm gonna do it myself, because I see it's the only way I can do anything here. But you were mentioning before a very interesting aspect of IoT and data analytics in general in insurance is it depends on the type of customer and on the type of client. So there are clear differences, and I like to make two groups out of it. If we see personal lines and commercial lines, what major differences do you see between those two groups?
So, I mean, ultimately, you know, it boils down to the risk you're trying to underwrite or the insight you're trying to get from the data, right? So, on personal lines, you know, obviously you're trying to predict motor claims. On commercial, like the drivers for claims prediction will vary depending on what you're trying to predict. Now, for example, there is some crossover, obviously, between personal and commercial in terms of property risk, for example. Yeah. But I think the main point really is twofold. What you're trying to, the drivers of the risk are slightly different, not completely different. Ultimately, it still boils down to property, person, geography, and the business. Obviously, the business is a really important one from a commercial perspective. But they're kind of the four sorts of ingredients into understanding like what drives your customers' claims behaviour, as well as actually what drives their needs and wants. So that's very similar in the sense that the data used to understand what product you should be offering and how you price it, for example, that there are some similarities, again, dependent on which element of commercial, because commercial can be incredibly complex, because bigger businesses are actually bespoke, right?
Yeah.
That there aren't, you get commoditization, if you like, so the similarities of product become really, really sort of almost irrelevant for some sort of larger businesses, because ultimately that's, like the drivers of it are reasonably unique to them. But so where we operate, Simply Business in the micro segment, there are sort of material elements that are kind of similar in terms of customer understanding and the customer sort of being sort of digitally savvy in the same way that sort of aggregators were on personal lines. So there is an element of similarity, but I think naturally, because one is specific to your personal risk and one specific to your business risk, there's always going to be some differences in that sense. And I think what that means from a data enrichment perspective is obviously that the commercial market is behind, but I think it's catching up really quickly. It's catching up really quickly, and for some of the reasons that we've spoken about before, like when personal lines were starting this journey, let's say 15 years ago, for argument's sake, the technology available to them was not the same as technology available now. And that means that the ability to turbocharge, that the sort of, if you like, that magic curve, right, is going to happen again on commercial. In fact, it's already happening. The sort of the journey to majority is going to be much quicker.
Yeah, because we already have experience on personal lines, and we just have to, in a way, replicate what we've done. So another question when we talk about data analytics, I always see, or I classify the levels of data we use. So we personally use 3 levels. We say basic data, or let's say identification data. Who's the client?
Mm-hmm.
Traditional data, so the data we use in our pricing models currently, and alternative data. So it's data that is related to risk, but has never been used to define pricing models or to analyze the risk better. And something we found is that these 3 levels are available on open data sources. So in your opinion, how helpful is open data in the space, but what challenges does it present?
So, I mean, the simple answer is how useful is open data? Incredibly useful. But obviously the qualification to that answer is like, it helps complement what you know already. And, the key advantage obviously to open data is it's free. And I guess that, that is so, in a way, there's almost like this opportunity to sort of understand where in your current data strategy elements of using open data will complement what you do, and where you don't need to use it at all. Because one of the things that's obviously becoming apparent is as we've been through this kind of acceleration in usage of data and storage of data, there's also a lot of data that we don't use for much, right?
Yeah.
So not all, most data is so most companies know which data is most important to them. That's what I'm trying to say, and I think it's always a good idea to keep everything that you can within, obviously, the sort of within the realms of GDPR, because you can't keep data that's not relevant. But the question really then is, of the data you're not doing as much with, how does open data start to unlock some of that value? And I think, to your second point on the challenges with it, again, it's storage and consumption, I'd say, because there's so many different places you can get it from. Like, what is open? We could be here forever saying this, actually.
Yeah.
But what is open data? Right? There's tons and tons of different possibilities. Some of it's structured, some of it's unstructured. Was another point. Like the advent of open data for images. Let's just say, right? That's
a crazy world.
That's data, right? That's data, but it's not data that, as an insurance industry, we're kind of familiar with at a majority level. How would how could you use some of the stuff that, like Google and Facebook are doing around sort of image analytics to help with, I don't know, your claims process or something? I don't know. Yeah. That's, again, further on in kind of the thinking, but it depends on what type of open data is, I guess what I'm trying to say. And it really goes back to that point around each insurance company will know what their primary objectives are from what they're trying to get out of the data and what insights they need. And the question is, how does the open data complement it, really?
Yeah, I think the analysis of images is a very interesting space. Because now, we in the past we did some testing on that. So when you look at commercial risks, you can find a business on Google, and sometimes you have pictures from inside the business, especially if it's a restaurant or a coffee place, right? The challenge was that back then the technology available was not as accurate as it needed to be. But I think with all these AI models that we have right now, this week, we have new ones to analyze images that can make a lot of sense, because in the end, it's very important for underwriters to see if there are fire extinguishers, where they are placed, the type of materials in which that building is built, and so on. So that is a very interesting next step for the industry, I think. I know solutions doing that for other industries, like real estate, for example. But I haven't seen any player, or I haven't seen any insurtech doing that nowadays. But I think it's one of the most interesting spaces, probably, within how to use open data. I think when you say that the importance is where is this in the data strategy, that's true. That's probably the key point. And for that, I will say, so we have as viewers insurtechs, we have people from insurance companies, from MGAs, from most of them come from data analytics department, actually, because insurance is all about data. So what are your top 3 recommendations for them when they look at data analytics and the strategies and the implementation? You've had a lot of experience in this field. What are your 3 top tips for people?
So I'm kind of going to answer that question by reversing to a conversation we had about 10 minutes ago, I think, which is around understanding your use cases. And the answer to that question is going to be different whether you're a broker, whether you're an MGA, an underwriter. Well, that's probably the same thing, but you get the point that, like, if the main thing you're trying to do with your data is to understand customer buying behavior, for example, then the data that is likely but not guaranteed that the data you would need to increase your understanding of customer buying behavior will be different to the data that somebody might want to understand predicting claims, for example. Now, obviously, there is some crossover between, some data is wholly predictive of behaviour at different parts in sort of the customer purchase journey, but I'd say the point around how to embed data better, how to get more from it will depend really on what you're ultimately trying to shoot for. And then you've almost got like a bit of a roadmap at that point to sort of understand, okay, if we're trying to achieve X, then where are we now? And, what does the best kind of view of X look like in the market? Because ultimately it's all a relative game as well. That, it's...
So who's doing it well so we can imitate it.
And I think I think there's a lot we can learn from other industries. So for me, banking is a great example of really kind of, I'd say, connecting to neighbouring ecosystems is the best way I put it. So, it's almost an unfair analogy to make because, everybody interacts with their bank almost every day. Well, not everybody, but banking apps are quite popular. In insurance, we have an annual relationship with our customer, really. And I know, certainly in my company, we're doing tons to ensure that, we sort of nurture the relationships and ensure that they're ready to purchase and ensure that we're doing everything we can to meet their needs. But ultimately, the requirement for insurance is an annual event. And that means that you don't necessarily have the same level of sort of daily interactions with your customer base, which effectively means that what the banking industry has done is to tap into neighbouring ecosystems and make them part of that. So, for example, financing cars when they know a customer's in the market for a car. So things like that. Like the insurance equivalent of that is a challenge to unearth because we're ultimately insuring risk. So I think that's a really kind of important point around that, is to be able, and that goes back to some of the IoT stuff actually. It's around how do we understand more about customer lifestyle and sort of start to leverage some of that in terms of propositions and understanding, really.
Well, actually, the analogy between insurance and banking is one of my favorites. I really like it. I think when we compare at what speed both industries move, I think it's fair to say that banking is very innovative. And one of the reasons I believe for that is if you look at the players in the market, you can see Revolut, N26, new digital banks, right, that came in and started to attract clients from the traditional banks. And all the banks were scared about this and said, look, we need to go digital, otherwise we're going to lose a big part of our clients, right? If you look at the insurance market, that hasn't happened. There's no insurtech that came in and started to get clients, at least in a level that can be compared to Revolut or N26. So I think that's why the insurance industry is more relaxed, saying, well, we don't need to innovate as much because it's going well for us already. So if something works the way it is, there's no need to touch it, right? So that's, at least is my opinion. I don't know if you share that opinion, but it's the way I see the analogy working.
There's always, I more see it as a comparison, as in I think that the banking industry has had opportunities and taken them really well. I'm not sure that it's difficult to say whether the insurance industry's naturally got the same kind of opportunities in that space, but in some ways you'd have to say probably they do, we do, but it's been materially more difficult to leverage them due to various reasons. You know, like sort of data regulations and the legitimacy of using data for certain use cases, GDPR type stuff. Really, I don't know. It's I think we've made inroads into it to a point. So there are some successful examples of using leak data to sort of prevent claims. It's just not become a massive norm, which I find interesting. So.
Yeah, it is. Well, I think, Jay, we should make a second.
Sure.
A second webinar.
I feel like I've been talking for hours. I don't know if any of your listeners will still be listening at this point.
But I find there are many topics, that remain unanswered, and thinking that the insurance industry is based in data. We can talk about data, then we can make another one. If you agree, if you enjoyed making this one, then
great. Thank you for having me, Roger.
Absolutely.
Anytime you like.
Absolutely. Maybe the next one we can talk about the future. A bit more and see.
Sure.
Let's see how the future looks like for the insurance industry. But thanks, Jay, for coming.
My pleasure.
And thanks everyone for tuning in. I hope you found it interesting, and we'll see you in the next one. Thank you.